Happy Monday morning to you. Omid here with you once again to make sense of this crazy marketplace that we call real estate. Hang in there with me for the next 5 minutes. You're going to be smarter than your competition. All right, what's going on in the market? As I talked to you last week on Monday, as I predicted, we were in an oversold territory as far as the statistics went, meaning that the bonds were becoming a good buy back in for the bond traders. Now, that in and of itself didn't make this magnificent, wonderful movement that we have. But because of the fact that the BLS, the Bureau of Labor Statistics, released their numbers for their job creations report lower than expected, hallelujah, we have some truth in the system finally. After all these many months, it's coming in more in actuality, well, ish, if you will. I'll explain that in a second. But that lower than expected, that shows weakness in the economy, has now given bonds a flight. And so now we've got 2, 3, 4 days that have been very, very beneficial. And it's a really good thing. And it's great for us to be able to see this kind of reprieve a little bit. What does that mean? Last we left our heroes, 7.43%. Today, ta-da, hallelujah, 7.28%. So a significant decline in mortgage rates within this last week. And all of that had to do with that number. I'll explain that again in a minute. Now, what's going on? There's market movers for this week. Really nothing. Nothing's happening on Monday, Tuesday, Wednesday mortgage application. Again, not of consequence to anyone. Initial jobless claims on Thursday. That will be interesting to see if it's going to be in line with what it is that the BLS jobs report says. And on Friday, nothing. Hey, real quick, as I always ask you, please, if you find this information that we're giving you useful and helpful to you, please do me a favor, share it with at least one other person. It's this level of financial education and communication that we need to get out there to offset all the negativity that's out there from the media, whose job it is to scare us and sell ad space, right? So get this out to at least one other person who is either in the industry or looking for a home or is a home buyer or something, and allow them to become educated the same way that you are being. Okay, here we go. Last week, I explained to you something down here. I had this chart, if you remember, on stagflation. Stagflation really has three arms, as we talked about. We need to have a negative economic growth. We need to have an inflation that is higher than expected. And we needed to have an unemployment that was showing weakness in it. So when I showed you this last week, these two things were holding true, but the unemployment, again, because of the Bureau of Labor Statistics, the way they report stuff, was not. Now, the BLS jobs report, they were expecting 243,000 new jobs to be created. It came in at 175, right? So at least they reported it truthfully that way. By the way, ADP, the largest payroll processor in the United States, processing 250 million payrolls in every single month, was saying that it was only supposed to be 38,000. So as I dug a little bit deeper in this 175, you guys, they have used their ability to do a birth-death rate of businesses, meaning that so many businesses opened, so many businesses closed. And then they gave a positive adjustment to this number of almost 350,000. And that's why we got 175,000 new jobs. So without that positive internal adjustment that they did, it's more likely like 155,000 jobs lost. And when we say jobs lost, we're not talking about 155,000 individuals who were working on a Monday and now no longer working on a Tuesday. We're talking about folks that were working 38 hours a week, and now they're only working 37.3 hours a week. And because of the workforce in the United States, that deficit from point X to point Y represents and feels and walks and talks like an unemployment rate that came down by 155,000 jobs. Okay, so I hope that makes sense. Now, what that did is that pushed up the unemployment from 3.8 to 3.9. So now back to the stagflation. We are seeing GDP certainly is down. We're now seeing unemployment certainly is a little bit up. And the demand for goods and services is now starting to also show itself, because a lot of the hiring was being done into hospitality, but I think people are sick and tired of going out and spending so much money at restaurants and places like that. So we're seeing that hiring also come down a bit, right? Inflation is still up, obviously, from where it needs to be, and that is what the Federal Reserve is wanting to control. Now, all of this jubilation, if you will, that the stock market's always having, right, regarding what the Fed is going to do. Remember, the stock market shot up like a banshee in October, expecting 6 Fed funds rate decreases. as we talked about so many times ad nauseum on this channel, that is not going to happen when we're hitting new highs every other day in the stock market. Why on earth would the Federal Reserve reduce the Fed funds rate, right, to stimulate the economy even more and drive inflation up? That's not their mandate. Their mandate is to control inflation and create jobs. Those are the two things that they're supposed to do. So now we went from 6 to maybe 3, as I've always asserted that I think we're going to get 1. We're going to get 1 Fed funds lowering of the rate, and it's going to be closer to the election. But now, based on the fact that Jerome Powell came out last week and says that he's not going to raise it, now again, the stock market's rallying because he's not going to raise it. So which is it here? Is it good for people to be unemployed and the stocks rally, or is it bad for people to have too many jobs or to make too much money and the stocks rally? I hope you're following some of this, that no matter what's happening, that stock market is still thirsty and continues to kind of rally in that way, which again, that is inflationary because folks that have money in their brokerage accounts will see their money grow on paper, and they will go out and they will continue to spend at the same levels because they feel richer than they actually are. So pass this along to everybody. Make sure we get people educated from a perspective of buying a home. This is still a fantastic time, but I will tell you that even from Wednesday, Thursday of last week up until today, we are seeing significant activity from home buyers calling me. A lot of calls over the weekend, this weekend, lots of visits to all of our new construction site. So even that rate going up from, what was it here? Going from 7.43 1 week to 7.28, that has brought on additional activity. And remember, if you're a home buyer watching this, when there's additional activity, what will sellers do? Will they reduce or increase their purchase prices? Obviously, they'll increase them. So you want to be able to grab a hold of this. If you're ready to buy, jump in the market now, have a good conversation with your loan officer, and come up with a good plan of how you're going to jump in this market. But jump in the market now, because if this thing continues and we start to see some cracks in the strength of the economy, bonds will rally, rates will continue to drop, and we're going to get more home buyers into the market, okay? Hope all that was useful. As always, do us a favor and subscribe to our channel and share and comment on all of this stuff. I want to know what you guys are thinking. And let's get out there and with your help, spread this word and get people educated so they know the whys behind things are happening and they're not just sitting there staring at Good Morning America with the wrong information. Okay? Have a fantastic week. Chat with you soon.